Hey, what's up, y'all? Hey, I just want to record a quick video to talk a little about one of the most irresponsible pieces of so-called journalism I've seen in a long, long time. And this is the story that came out recently about loan level price adjustments for mortgages. You might have seen this reported on Fox News. Dave Ramsey picked it up. A few other sources picked it up. So the original source of the story, I believe, came from the Washington Times. Some low-level journalist published a story that was very misinformed and just really inaccurate in the way it was published. And so today I want to talk a little about what's actually going on. So first of all, this only affects conventional mortgages from Fannie Mae and Freddie Mac. So VA loans, FHA loans are not affected at all from all these changes. Now, what you might not realize is that when you get a mortgage, it doesn't come from just some vault in a bank somewhere. It's not sitting in a safe. That mortgages are actually securitized on the private market. So what happens is your mortgage company bundles the mortgages with other mortgages, and then the funds are sold to Freddie Mac or Fannie Mae and turned into securities that pension funds and things will buy those securities. And so they also have to do what's called a loan level price adjustment to factor in for risk. And the best way to think of this is like car insurance. You know, a 16-year-old with 3 wrecks is going to have higher car insurance premiums than a 65-year-old that's never had an accident, right? Same thing. So that's what a loan level price adjustment is to adjust for the risk of the loan. Now, what is a fair loan level price adjustment? And that's always the debate back and forth. You know, do you factor in for higher debt ratios? Do you factor in for lower credit scores? Do you factor in for second homes? The answer is on almost all those times, yes, absolutely. They factor in for all those. Well, there's always a back and forth of how much do you actually factor in for each of these different risk factors. So what happened was about 5 months ago in January, Fannie Mae and Freddie Mac decided that the penalty for lower credit score borrowers was a little bit too excessive. So they just decided to scale back that penalty to be a little bit closer to what everybody else pays. Now, that doesn't mean there's no penalty, because there actually is still a penalty. But it certainly does not mean that there is a penalty for high credit score people. I'm seeing these crazy stories that somebody with an 800 score is going to get a bill for $50 a month from Fannie Mae, you know, a high credit score fee or something. I've seen just crazy nonsense like that. That's completely not true. So all that's happening is that the penalty for the low credit score borrowers is being reduced a little bit. That's all it means. It's just being reduced. That doesn't mean they don't pay higher, because they certainly do, especially when they still pay mortgage insurance, and that's definitely a risk factor. So there you go. That's what's really happening. As usual, the media is being moronic, and everybody's got their political agendas and whatnot. But that's what's going on. If you have any questions about mortgages, really anything mortgage related, just give me a call. My number is 937-572-3713. Talk to you later. Bye.